Welcome back to the watch list. It's been an eventful year when it comes to the world of energy. A lot of fluctuations, geopolitical tensions, commodity prices that have been so up and down, and lots of M&A activity. What can we expect next year? Dryden Pence, Chief Investment Officer, Pence Capital Management. Stuart Glickman, Deputy Research Director and Energy Equity Analyst at CFRA Research. Thank you both for being with us. Dryden, what did you think? I mean, we basically, and I'm saying roughly, $65 to $95 for oil in 2023. What did you make of this year that was, and how do you spin it forward?
Well, I think, first of all, happy holidays, and it's great to be here. Thank you. It's good to see you. But I think as we move forward into 2024, yes, we had some variability in the year, and obviously we had some inflation, things like that. But I think what's going to happen is 2023 is going to go down as the year where OPEC lost its control of the oil market. I think that as you look forward into 2024, I mean, every time OPEC pulled back, the rest of the world stepped up. The United States produces more oil now than they ever have. We're over 13 million barrels a day. And so I think what we're going to see is that OPEC, as their control is much less than it's ever been. Their ability to push prices around is much less than it's ever been. You've got other players that are needing to pump a lot. So I think that, again, 2023 is a year OPEC lost control of the market. 2024 is probably going to be pretty good for consumers because we think prices are going to be, lower. We're in the 70 to 90 range, no longer in the 80 to 100 range.
Okay. So what are you thinking, Stuart? I mean, what stood out to you this year? Were there any, obviously the geopolitical events, horrific. It's always terrible when you talk about war, but that sometimes can really bring around some volatility in commodities. But what stood out to you? I mean, you had OPEC. Did they behave in the way you thought they would, and what's your outlook?
Yeah, so I think a couple of things stood out to me this year. Number one, certainly the U.S. oil production, they have gotten a tremendous amount of kind of more with less. They've been able to, really generate a lot of incremental production without spending a ton on new CapEx. And I think what that suggests is some improvement in technology that is allowing them to do that and still plow a lot of money into dividends and buybacks, what have you. I think the second thing that jumps out at me, and this alludes to Dryden's point, is that at least towards the end of the year, OPEC Plus has seemingly less agreement going forward than they have in the past. And what I would point to is their decision at the end to a series of individual cuts, voluntary cuts, as opposed to sort of one collective group announcement, which to me suggests that Saudi and Russia probably had a hard time marshaling the troops to agree on collective voluntary cuts. So I do think it's a wild card. The third thing that I would point out is that despite this being obviously a pretty intense geopolitical year, that is not manifesting yet, at least in terms of commodity prices. I think that's a major wild card to think about for 2024. I am a little bit more optimistic than Dryden is. I would take the high end of his 70 to 90 range, but I think big picture, putting it all together, because of how well run a lot of these energy companies are, I think their earnings profile is going to be pretty strong in 24, and I think there's going to be plenty of dry powder available for dividends and buybacks. Yeah.
And look, Stuart, you talked about the M&A activity before we even start to see some of it that actually happened, and I know you're bullish, Stuart, on the group for 2024. Dryden, what are your favorite names in the group?
I think that Exxon and Chevron still stand out in the group. When you take a look at it, PEs around 10 or 11, and you've got dividends, 3.5 to almost 4. I think we like those two companies. Obviously, the pipelines are good, but I think when you look at the fact Exxon is the fourth largest producer of oil in the world, just behind Saudi Arabia. So I think these are dominant players, and I think they're going to do very well as integrated oils throughout the year. So we like both those names.
Yeah, and Stuart, a quick thought on Eaton. That's a name you like, right, for 2024?
So Eaton's an industrial company, but it does have overlap into the energy markets. But I would say that if you're thinking about where to position yourself in energy. In a view that oil prices probably do well in 24 relative to 23, I would also be on the side of the integrated oils and the E&Ps. So take Exxon and Chevron, like Dryden mentioned, and then on the E&P side, I would say EOG Resources certainly is a standout. Diamondback Energy, I think FANG is an attractive buyout candidate. It's in the Permian Basin as a pure play. That, I think, is going to be the source of a lot of incremental M&A in coming years. It was obviously a target in late 23.
Yeah. Dryden Pence of Pence Capital Management and Stuart Glickman of CFRA. Always great to see you all year long, and I'll see you into 2024. Looking forward to those discussions.